that right? No? Am I spreading misinformation already?
Yeah, we'll see where the rest of this demo goes.
Hey team, thank you so much for those of you that joined us for the Keeper webinar. We're about to replay that back, but be sure you subscribe to this channel because we're about to start releasing some deeper dives into each of the metrics we discuss, as well as some other key metrics that we believe are crucial to helping any business owner understand their financials and drive profitability. Be sure to subscribe and we'll begin posting those metric videos starting this week. Thanks a bunch.
And Tyler, the floor is yours. Thank you so much for taking the time. I will leave things to you.
Absolute, Ben. Thank you so much. So today we're talking about metrics and at least how we prefer to use them in our firm and some of the fun things that you can do. Now, I'm going to go through this quick because we only got a bit of time, but this is recorded, remember. So if you missed how we clicked through something or something wasn't very apparent, really, I encourage you to go back, watch the this webinar again, because that's where you're going to get your details and it'll slow it down and help you set this up yourself. So don't panic if you don't realize how we set something up the first time. That being said, I'm going to share my screen and you guys should see a beautiful Keeper dashboard, or as Ben told me, they call it internally, the Keeper Peeper. And we're going to, is that right? No? Am I spreading misinformation already?
Yeah, we'll see where the rest of this demo goes.
And so we're going to look through one of our main clients here. One of my favorites here is Kenny's Beauty Salon and Plumbing Service Center. And as we go through and are looking at our month-end review for any client, first of all, we want to make sure all our tasks are done for the month. But once we have everything set up, we want to start doing that review. And we can just do this simply by looking through the profit and loss. The key thing about metrics is that it lets us hone in on things that we want to monitor for this client, but there is no standard, this is what we do for every client. There is an art to this of understanding what key levers are going to help our clients better drive profit and efficiency in their business. Something I like to do, whether it's in QuickBooks or in Keeper, is I'm even just going to run a 12-month view. And I'm going to look at maybe some key things. I'm going to look at some expenses that seem a little odd, like maybe their discount and comps seem high. Maybe their cost of sales seem high. Looking at labor. And as I look through these things, I'm going to take notes so that when I go over to my metrics section, I'm going to be able to build these out. Now, we're going to jump back and forth between this page and the metrics. So I'm going to quickly jump over and show you. First thing I'm going to do is while we have these preset tables that Keeper has very proudly put in for us that we can see all of our stats by month, we're going to create our own section. For the ease of simplicity, I'm going to call it KPIs. And under here, we can set up all our new statistics. Now, for most of my clients, I like to do simple ones. And we can either add a static statistic, which will never change over time. It's just a number that we want to input. And I'll get to an example of when we use this. But I like to do formulas. One of the easiest ones I do just off the top is a profit margin, right? Super easy to put into place. And profit margin is just going to be your bottom line net income on the P&L divided by your top line income. We do that. Invalid formula. Ben, what did I break? Let's do this one more time.
The net at the beginning.
There we go. Profit margin. So it's returning it to us as a decimal because this is a percentage, but fret not, we can get it into a nice pretty format when we put it in the reporting structure. But first thing I'm going to notice is these guys have had some good months where they're running a great profit margin, and other months where it got a little bit dicey, right? We shrunk down all the way down to 0.6 one month. And lately, we're also doing pretty rough. Our profit margin has shrunk. So we're going to start looking into what could possibly be impacting this. Well, a key thing for me, and this is going to be very important on how you set up your chart of accounts, I always, with my clients, love to have all labor expenses booked into a certain payroll section. So I'll have my hourly wages, my salary wages broken out. I'll have my PTEB or burdens or whatever you call it, but payroll taxes and employee benefits, all in a section that I can either look at just pure labor or I can look at payroll as a whole. One of the things that's usually important to look at with most clients, especially if they're a service-based industry, is their labor. So I'm going to come back over here, go to my KPIs, and because I have an entire payroll section, I can look at my labor margin. And this, another one simply, is going to be my payroll section. And as I showed you earlier, I had a payroll parent account and then a whole bunch of children accounts underneath that were hourly wages, salary wages, and everything that rolls up into it. If I select the parent account, I'm going to get all those sub accounts with it. So we're just going to say all payroll expenses divided by income. And where is it? Profit and loss, pure income. Great. And no errors this time. So now we've got a nice little graph here that's showing us our labor over time. We can do a labor margin, and we're going to see some of those months where it gets a little rough. We're going to be able to start looking into this further. For those of you that like a visual representation, we can even come over here from variables to visuals, and we can get a nice little graph of this. And notice that they conveniently put our sections that we create right there at the top with our profit margin and labor margin. I'm going to put both in here just so I can see this over time. Now, I don't think at the moment we have a way that we can custom change the colors. Is that correct, Ben? No worries.
Yeah, that's correct. Very long standing. No, we need to fix this.
No worries. We still get the information. And for the most part, the colors aren't this close usually. So I apologize, Ben, that my example was the one that picked two greens. But regardless, we can see the profit margin over time and the labor margin over time. And it actually really interests me that our labor margin has spiked, yet our profit margin went up this last month. But for the most part, we can see a downward trend that as labor margin has gone down, profit margin has gone down. This is very interesting to me. So we're going to look into that because that's not normally what we see. Back here to variables. This is where we have a lot of fun in our company. Is I'm going to show you one of the things we do to get a real hack on our clients' financials. And that's we track statistics for them. And not just these metrics, which are calculations, but actual statistics. Ben and Kenny's beauty, not sorry, Ben and Kenny's, just Kenny's Beauty Salon and Plumbing Service Center keeps track of how many manicures they do every month. And if we go into their point of sale and just run a quick report and just, it tells us the total number of transactions, we can put this in here. So now we can go and say, where are we at? We're starting in August. So we're going to say number of manicures. Perfect. And I'm going to come in here, and at the end of each month, I can just update this each month at a time. So starting in August 2021, I got my numbers over here. Man, good volume, you guys. And what's my last month? It's falling off my spreadsheet. 576 and 1042. Okay, so now we've got our static numbers. You can see we've got a calculation here. We got a static number. This is where Ben and Kenny can really start to drive some value because they can see their labor margin is definitely going up and down on a business where you should have a set cost. If we put in a new calculation that is the labor per manicure, can't do that. Labor per manicure, we can do our manicure expenses, right? We have under payroll expenses, our manicurist labor. And we can divide that by the statistic we have, which is number of manicures.
Tyler's going to want you to save the number of manicures variable first.
I didn't do that. Thank you, Ben. Going so quick here. There we go. See that? Click a save. So now we can come back in here and do our number of manicures. Select our KPI.
Again, it's going to be the space issue of very little fault tolerance on the formula input at the moment. So the extra trailing pound.
Thank you, Ben. Going quick here, folks, so I'm losing things. And this is where I really love Keeper, is because now I can see over time my cost per manicure, right? My manicurist should be a set cost. And as we can see, it used to be 13, 13, 12, 12.5, 13, 12.5, 12. This is a good range to be in. So what happened in April that all of a sudden we're going up to 15.5, 16.5, 17, 18? We have an issue here, folks, on labor. Now, Keeper's not going to solve all our problems for us, because this might be an issue of people are staying long after their shift and staying on the clock and talking. Maybe this is expected, and the cost of manicurists have gone up dramatically recently, and we've had to increase wages. If that's the case, this makes sense. But if that's not the case, we've got something we've got to look into as an owner. I know for myself with the hotels, we're tracking housekeeping labor to clean a room. When we saw costs going up like this, we found on the security cameras, when we told the GM about it, he found an employee just in between rooms number 5 and 6, just sitting there on their phone for 2 hours a day, just to get some extra hours. And that's what was increasing the cost. Finding things like that, the general manager would have never known if we didn't bring this to their attention, because we said, hey, your cost per manicure is going up. Is there a good reason? And as I said earlier, there can be a good reason, which would be a pay increase. So that's our labor margin, our profit margin. And again, if you want to come back over here and create a nice little visual of it, let's do another one. And let's do our cost. What did I call that metric? Labor per manicure. Perfect. Labor per manicure. If you want a nice little graph on this, there you go. This is going to get your business owner's attention when they see this. And this is where you're going to drive that advisory value, saying, hey, we're noticing certain issues for you here. Now, this is helping them save expense, but what if we want to help them also drive revenue? Because you can't have profit without revenue. Well, one of the things I love to do, oops, I'm clicking around too much. One of the things I love to do is, if there's a business that has a maximum throughput, a maximum capacity, a manicure station is most likely one, or I guess it's called a manicure station. I don't know. This is not my industry, but we can start tracking, are we getting the maximum amount of customers in the door every day? And one of the ways we want to do that is that we're going to come in here and to figure out if we're getting the maximum number of guests through the door every day. We first need to know, how many people can we get through a door? Well, we know that we have, well, first we just need the number of days in a month, because we need to know what we're multiplying by. So we can just do a set statistic. And Ben, honestly, this might be an easy win for you and Kenny. Just build in, this is a set default for all of us to have, right? Then we don't need to add it. There you go.
Yeah, I think that would make definite sense to add.
All right. Yeah, 31 days in August. I should know that. That's my anniversary. Man, that'd be bad if I forgot that. All right. 28, 31, 30, 31, 30, 31. And if I got it wrong, just bear with me. Again, going fast. I'm going to remember to click save this time. And now we can build a new metric, which is, in the hotel industry, we call it occupancy. In a made up manicure salon, we're still going to call it occupancy, because I don't have a max time, but it's the max throughput, right? How many people are we getting into all our open chairs? So if I were to say my new calculation is the number of manicures. There we go. Okay, that is right. And we're going to divide that by the days in the month times, again, we need to do this little calculation, the number of days in the month versus how many people I can get through our manicure chairs in a day. Well, I know I have 4 chairs, and at an hour each, we can do 10 people a day. So that's 40 a day that we can put through our salon. Perfect. So we're going to say occupancy, but we can change this name if we want later. Occupancy percentage.
Yeah, it's the
breaking
pound.
Things.
It's the pound again at the beginning.
Where
the number of, so basically,
yep.
Yeah, if you delete that. So when you add a space, it will no longer like go back and delete the space when you're searching for things.
Got it. Thank you, Ben. All right, so now we have our occupancy, and this is where I love to help my clients, because now we can help them identify the time periods where they can start to drive revenue. If you look at this, it looks like our summers, 94, 92. In fact, let's put this in a nice, pretty visual again. I'm going to add a new one. And we're going to do occupancy, run. We can see that this is a very seasonal business all of a sudden. We can see that during the summers, they have no problem putting butts in those chairs. But during the shoulder seasons, you know, right before Christmas, when the weather's getting cold, people start putting on their gloves, but they're not going out for their huge ski outings yet, where they want to show everything off. this is when they're really struggling. Same thing in April, May, June. Maybe this is a very luxurious part of town that's for the ski and outdoors industry, like Park City, Utah, just up the hill from me. And there's not a lot of people in town during these seasons. Either way, helping our clients see this can help them figure out how to drive revenue. During these times of years, if my client were to come to me and say, hey, we're thinking about running a promo of buy one, get one free, or 50% off if you buy a membership, I'm going to tell them, like, no way, in August, don't you ever do this. You're already getting maximum throughput. You don't want to replace people that are already paying full value with people that are getting discounts, because that's going to hurt you. Keep the revenue up. At 94, I know a lot of you are probably saying, like, hey, they're at 94, they still got 6%, but maybe that 6% is like the first reservation of the day and the last reservation where no one wants it ever. So maybe you give a discount on that first or last one. But don't let your clients make bad decisions if they're already getting that max throughput. Again, the only way we can do this is by using Keeper to track those statistics in their system. So this is super helpful for us identifying that occupancy. Ben, real quick, should I stop and clarify, or any questions on this that we should touch on before I move on?
I don't see any that are worth there are some questions that are coming through that you're definitely going to get to. So awesome. If you don't, I'll interject.
Great. So no questions. I'm either crushing this or I'm scaring everyone. Either one, I'm happy with.
Plenty of questions. It's okay. Just keep doing what you're doing.
Awesome. Okay, so we talked about different stats that you can track in here by using static ones and formulas. Now, looking at how we drive profitability some more, I know that when I was looking at this client, I'm going to come all the way back down to my nice dandy review sheet, look at 12 months. And one of the things that stood out to me when I was reviewing these financials is we have our revenue and our comps and discounts underneath it. And when I was looking at this over time, we could see that, like, lately comps have been $600, $700, $800. But what was going on last year when it was $1,000, $2,000, $7,000? What were you guys doing? And we established January was a high throughput month. Why are we giving away $7K in discounts? Well, let's make this something that is very clear for our clients to be able to look at. Coming back in, we're going to create a new metric. Hopefully this time I don't put any errors in the formula. Ben will correct me if I do. And let's do our discount and comp margin. Discount comp margin. Perfect. So we're going to come in here and we're going to do our discounts for manicured revenue divided by our manicure revenue. Perfect. And I don't think there's any errors. Bazinga. Okay. So now we've got our comp discount margin in here. And as we suspected, look at this, 5%, 6%, 5%, 6%, 43%. What was going on here? Now, luckily, it looks like they've gotten this figured out. They've solved this problem. But let's say this 43, 33 happened in this month. I want to bring this up. And in fact, if I just took on this client, I want to call out that I noticed this, that this is something we should keep an eye on because it has a potential to rear its head. Well, I ask about it November, December, January. Hey guys, what happened last year? Why were comps and discounts so high? That's really eating into your bottom line revenue. Come to find out that, the owner's uncle Jerry was coming in and thought he had the authority to comp manicures to all his friends' wives, and was just going like crazy. And eventually they had to put a stop to it and get Uncle Jerry out of there. All of a sudden, profitability came back. Now, again, this is something that's already been resolved, but if we saw this in the last month, you better bet we're asking about it. And what's even cooler is Keeper allows us on our executive summary page to have this be something that shows up very apparently every single month. You'll see down here, the default for these key metrics shows our bank accounts, but we can include other things. We could come in here and add to our key metrics. We want, I'm adding so many metrics, discount comp margin. And we're going to say we want this as a percentage and as a percent. You'll notice there are other options when you select other ones, but for percent, you just get a percent. Simple enough. We're going to say close, move out. And now every month when they run their financials, they're going to see this discount comp margin. In fact, if they went back to, oh, I haven't created a close because I just created this company. But if I had a close for December, I could go back and add this and it would show our, was it December or January, our 43% margin right here, which is super helpful to see. And if you wanted to change that formula to a negative in front of the calculation, so that this was a positive number just for the sake of talking about discounts and comps, you absolutely could. So another great thing to look at, and another one that when possible, I could probably even add this one to this one right here. I'm going to go back and add my discount and comps and say, hey team, here's your graph for all the key metrics. Oh, not that one. Margin, discount and comp margin, run. And we can say, hey team, look at this. Now you've got a great graph to show you all these different margins over time. I think it kind of destroys everything we're seeing up here because it's negative. So maybe I remove it. Either way, a great story to tell your clients. Okay, I got two other ones I want to touch on real quick. Another metric maybe to have your eye on. You guys have seen me build them out already, so I'm not going to spend too much. But let's say they're using different booking engines, right? I see this in the hotel industry. Well, they'll book rooms directly on their website. They'll book them through Airbnb, Expedia, Booking.com. Let's say you have a nonprofit that's bringing in revenue from different sites, or you have a manicure salon that's using different booking channels. And we want to track our merchant processor margin. Again, we're going to do our merchant processor fees, whether they're using QuickBooks, point of sale, or anything else. And we're going to divide that by our manicure revenue. Boom. And there we get it. This is another example where I can see they must have done something in the past year, because this was at 7%. And I actually loaded dummy data for, January through July of last year. And this was around 10%, because they were using different booking engines to get sales in that were taking a higher margin. Once they got off that system, it was able to, they were able to transition. And we could even take this number and go further and say, how much they were spending on it, or we could say how much they're saving by doing the variance of, 7% to 3%, timesing it by their revenue. And you could actually have on here the amount they're saving in those months by switching. So there's a lot of cool things we can do, or sorry, yeah, the variance between 7 and 3% times your revenue. For the sake of time, I'm not going to build that one in, but there's super cool stuff you can give your clients the insights. The thing is you've got to know how to go through the P&L and pick out some of those things. And we will touch on the very end some resources to be able to do that. Last thing I want to touch on, as we said, this was a beauty salon, but we're also a plumbing and service center, because I want to reach out to those of you that are also in the construction industry, right? Not everyone has a service base. Cheryl, I'm thinking of you, plumbers, right? You can relate to this. What do we do if we have a client that is in a industry completely different, such as construction? I know that when I was looking through this, you'll notice we had our manicure revenue, but we also had our maintenance income, and we had a cost of sales on this. We could do a cost of sales margin on this maintenance income to make sure that they're getting that costs aren't going up, and maybe they need to increase their prices as well. But one of the things I noticed is that their mileage reimbursement, which was around 12, 15, 17, 11 a month, all of a sudden started shooting up recently to 26, 24, 29, 27. What is going on here? And that's where we can go in and be helpful to our clients, because construction industry, we can say, hey, something's going on with your travel costs because they didn't put the vehicle on the books. It's personal reimbursement, which is a whole nother conversation for later for tax strategies. And we can come back into our KPIs. In fact, we're going to add a new section. We're going to do construction KPIs. There we go. Now we're not muddying it up with our other one. And we can do our travel margin, or our travel dollar. You could do it the other way, travel dollar per maintenance income. But we're going to do our mileage reimbursement, see how much they're traveling, divided by our maintenance income. No errors. Ben doesn't have to save me. Perfect. So this is another one where you could tell our clients, like, hey, the cost went up, but what does that actually mean? right here, we can say we're at 14, 15% margin, and all of a sudden it's up to 30, 33. Now, we're going to ignore the world we live in where gas just went up like crazy and say that's not the issue. We're going to say we're in a stable economy where gas has been the same all the time. And we're going to ask our clients what's going on. Now, maybe your client comes back to you and says, oh man, we've had a couple jobs, like we're not getting anything local to us now. The closest job we're doing is 120 miles away. Like we have a 2-hour commute each day to go to this thing. You tell your client, look, you're pretty much doubling your cost here and losing that much in your profit margin just based off your mileage alone. Maybe we need to think about implementing a travel fee for any sort of jobs that are a certain distance away from you to help recoup this, because you are definitely taking a loss by doing these further distant away trips. Now, you could even have more fun by putting in something along the lines of, you could factor in the price of gas, right? Put in a static number in here and divide that and figure out how many miles they actually traveled if you know the mileage of the vehicle. There's a whole bunch of things you could do if you really want to get into the weeds. Which leads me to a side point, charge for this service. I know this sounds like a lot, but you can charge a premium for this. If you really want to get out of the weeds of the small clients and start driving value, you charge for this service, because helping set this up is a huge benefit for them. Getting back at it, the other thing we can start seeing is we can see our travel margins high, but let's also look at like how much money we're spending per job on this. So let's say, I'm going to teach you guys this one. There's going to be a resource we talk about in just a minute. But if we want to see how much we're spending per job, so another way to look at this, I actually have, I just have to find what I called it. Bear with me, folks. This is the problem with me building this out. I actually there it is. I actually kept track of the number of invoices or jobs that our client had each month. And there is a way, instead of having to track this in Keeper, you can track it on the financials. And we don't have time to cover that today. That's an additional resource, but we can track that in there. And so if we want to do mileage reimbursement divided by the number of invoices, there it is. We can also look at this a different way and say, hey, we're probably spending $190 something per plumbing job. And now that's going up to $435, $432. Now you put it in the terms of dollars, and you can help your clients see the impact that's going on to them. Again, you can put this back into your client summary and say, hey, it's a key metric. Here is what is happening to you, which construction KPIs. And we're going to do this one as a currency. And we're going to do whole numbers. And we can see, oh, I didn't name it right, but your dollar per job per plumbing invoice that you go out for, you're spending $432 a job. Now, these are bigger jobs, not just, changing valves, but you better be making that money back. And so helping our clients keep an eye on these key statistics is awesome. All that being said, I know I covered a lot here. And I want to open up to questions with Ben. I know we only have 5 minutes-ish, but we will have an additional resource that we are posting on our YouTube channel, which we are just launching. And anyone that's on here that subscribes to it will not only be sending you out the video on how to track stats in that system in QuickBooks directly, but a bunch of the key stats that you can start going through, how to calculate them, current ratios, debt to equity, net functional cash, different things that you can do to help your clients make their business better. And then you can also increase your rates with those clients and sell this as a premium service. So I just talked a lot. Ben, back to you for questions and anything I missed.
Yeah. So Tyler, first off, do you want to go ahead and throw that YouTube just in the chat here? We'll also distribute this as a follow-up so that when we send out this recording, we'll send that out. I want to highlight Deb's question here. Which is, who is the person doing this KPI demo? How do we access his awesome knowledge? I had to step away for the call at the beginning. So Deb, the answer to that question is just Tyler Otto. You can come knock on his door. He lives in Salt Lake City. And if you don't want to hop on a plane, you can always subscribe to his YouTube channel. He's going to be posting content like this and a whole heck of a lot more. Tyler and I have spent hours on the phone together, many a time talking about KPIs, the improvements we need to make to Keeper. And then when we make those improvements, we'll bring you back on and show all the latest and greatest. But there's lots, I think the sort of core takeaway from this is this stuff has always been here in Keeper. But the most important thing about advisory is sort of learning how to do it, jumping in, really starting to learn the levers that drive your client's business. And Tyler and his YouTube channel, definitely a super, super good resource for that. So thank you, Tyler, so much for coming on. I just want to say that before we turn over to any questions.
Those of you that go to that YouTube channel, you will notice it's blank. We are just kicking this off. So I'm trying to go the route of get subscribers before content. I know, bad model, but help me out here. And we'll definitely return the favor by giving you a few extra resources if you're in there by the time we kick off in the next 2 weeks.
Awesome. Okay, so we have about 5 minutes here. Let's see if we can crash course run through a few Q&As. A lot of people asking, so Tyler, if you want to share the different metrics you track for different types of clients, different industries.
I do a modified current ratio on their balance sheet, which really is total assets divided by total current liabilities. Think of it as how much cash do they have in the bank and how much debt do they have on their credit card and AP. And sometimes I'll modify it. Like, is it the total cash they have? And I don't care about what's in AR because they may not collect. I want to know what's in the bank and then what do they need to pay out in the next month between their credit card and AP, and can they cover that, right? Is that a positive value or negative? If it's a client that's really good on collecting on their AR, I'll do just straight total current assets and straight total current liabilities. But there's some ways you can play around with it. Again, there is no set standard for every client. You've got to kind of know your client and massage that in there.
Awesome. And Jennifer asked, how do I hire Tyler?
I don't think you want to. As Ben said, he was already scared at the beginning of this call. I mean, I show up on calls with a T-Rex. His name's Clarence. There you go.
Awesome. Okay. A lot of other questions in here that are not easy to answer in particular. And there's a lot of other functionality questions that we're unfortunately not really going to have time to circle back to.
Well,
but folks,
Ben, we have talked about doing this more in the future. So
yeah. So if you liked Tyler, we will definitely bring him back. If you didn't like Tyler, tough, we're still going to bring him back. But I'm going to go ahead and not just sort of like run to the very last second of this webinar here. So instead, if you asked a question, we'll post lots more details and answers about those questions in the Facebook group. So if you're not in the Facebook group, definitely go join that to get your questions answered. I'm going to throw a link to the Facebook group in the chat here as well.
And I will say, I know I keep posting the link to the YouTube. Please help me, because once I hit 100, then I can rename it. And then it'll be an actual link that Ben can send out that says Special BK, because they don't let you change your link until then.
Awesome. All right. Well, Tyler, thank you so much for coming on. And folks, thank you all so much for taking the time to join us here today. I hope you learned a thing or two about metrics. I hope you learned a thing or two about Keeper, and we are so excited to talk to many of you over the coming days and weeks, and we will see you all back here in about a month for the next catch up with Keeper.